Welcome back everyone to another technical analysis, and today we're taking a look once again at Polygon coin. So basically since last time, which was closer in this region, we were seeing a decent recovery. We also expected a smaller liquidity grab, but eventually the liquidity grab happened way further than we thought. And then we had another proper moment about the EMAs, and then this time it was without any confirmations, although we had smaller retest here on the smaller time frames, like 5-minute time frame, I would assume, both on 100 and 200 EMAs, but we formed a cross of the EMAs and price just being going up and up. Now, what is concerning us? Basically, since last time, we had an entry here. Of course, we didn't take it because price went deeper lower and we just canceled the position. But what's currently happening is, or what we are expecting in the smaller time frames, is very simple movement. Recovery, proper retest to the EMAs, and then further movement to the upper zones on the 4-hour time frame. Let me take a peek. Would be this region. So on the bigger time frames, the game plan still remains the same, which means that expecting at least a 50 to 100% movement while risking only like 17%, which I would say is more than good. And also, this is rather big stop loss. The ideal stop loss area would be or has to be somewhere in this region, which is again 14% of market price movement if we see any kind of loss from the markets. Now, once again, the bigger time frame game plan remains the same. We might see even a further movement to these zones, but basically starting from this area, this is the zone that we are expecting to see, with taking into the fact that Bitcoin most likely will see like another 15-20k push, which would result in most likely no more than this area to be filled. Maybe higher, maybe not, because if we look on the daily time frame overall, the price is way too undervalued. This project, Polygon project, is one of the favorite projects, to be honest, of mine. So I would say that this is way undervalued, and for the long term, the targets, of course, are like this is the target and this is the target. So two targets for the spot position. But anyways, getting back to the smaller time frames, once again going to the 30-minute time frame instead of hourly time frame. Seeing this huge CME gap, we see the similarities here. So we formed this huge CME gap. On the weekly opening, we had a push, which showed here as well. So we had not ideal push, but still there is some struggle. But eventually sellers reclaimed this area and then went for the upside movement. Now again, expecting the same scenario happening, fill, which would result in, let's say, like 6% of market price movement, then near this area would be looking for some kind of like a market structure break. So we fall, we struggle, and this would be an ideal entry, which would mean something like this if we would do like that. So yeah, this would be the entry that we would be looking for. I'm going to put this line here, looks much better, and like that. Yeah, my Picasso drawings are going away. So one thing I would like to point out before finishing this video, all the CME gaps have been filled after we had this bigger dip on the market. So won't go into the big details, but basically filled, this one as well, I would think. I lost it. Actually, we didn't fill it, so we have a smaller one here left. Let me check. Yep, still have a decent CME gap here left. Then again, filled, one more, and basically all of the CME gaps, like 90% of the CME gaps, are being filled. So with that being said, expecting the smaller dip here, ideal entry for the short position would be this area here. Then target is 11 cents. after that we are going to look for a long position. So that's it for today. Once again, thanks for watching this video, and I will catch you tomorrow.